Hello, ladies and gentlemen. Welcome to the first of our SANAD Does Fintech webinar series. We're going to be talking about digital transformation today, specifically in the microfinance arena. We're going to start with a short video that just highlights one of the many businesses that SANAD have helped over the years. And then we'll be talking to a representative from SANAD, Alban Rishdi. So we'll start with this video.
حضرتك أنا أحمد سعد زيان من البرجاية محافظة المنيا، وجايب معايا والدي سعد زيان هو صاحب المنشأ أنا وهو. حضرتك جاي ناخد صفيح من القرض بتاعكم، جاي ناخد صفيح جبنة هنعبي فيه الجبنة اللي احنا بنصنعها.
لو حبيتوا تفضلوا معانا في أي وقت تتفرجوا على المكان وتشوفوا التصنيع وتشوفوا العبوة، تعالوا في أي وقت واحنا نتمنى نتشرف بكم في أي لحظة.
حضرتك دوت الحوض اللي أنا بستلم فيه اللبن وبسخنه وبنفعه، وبعد ساعات معينه بحطه في الجوالب ديت، وليه ساعات معينه بفضي فيها الجبنه ديت، وبرضك في ساعات معينه بحطها هنا واطلعها جبنه تاني يوم الصبح. انا بحب الزبون لما بيجي عندي وبيقول لي عايز اتعامل معاك وياخد جبنه مني ويشتغل بيها وتعجبه، بتبسط منها جدا وانا بتبسط. حضرتك كان والدي عنده بقره ووالدتي، فحضرتك حابين يكبروا المشروع، مش هيفضلوا على حالهم زي ما هم، فجابوا شويه لبن وصنعوهم جبنه وعملوهم، فجابوا الزباين جت خد من عندهم فعجبتهم جدا جدا. فابو والدي حب يكبر المشروع، اشتغل كافح وكبر المشروع، فعنده استعداد ان هو يكبر ويبيع 1000 طن في اليوم. وانا من بعده يعني انا كان مسكت معاه شغال، كملت معاه المشروع. هو كان الاول صعب، بس لما عرفت شركه ساندا وموانتني بالمشروع وما تعبتنيش معاهم، غير بره البنوك التعامل مع البنوك متعب جدا، غير شركه ساندا هي اللي موانتني على طول ووقفت معايا وساعدتني ان انا اوصل اللي انا فيه ده. نفس اليوم حضرتك انا اخدت 100,000 جنيه، فيا دوب اللي انا اشتريتهم بيه حاجات تحرك العجله مشيتني 15 يوم، ومن وراها انا اشتغلت، جبت الصفايح جبت العده بتاعتي وابتديت اشتغل مع الناس بتوع اللبن.
فأنا فخور طبعا بيه جدا اللي هو سندي، لأن هو ده مشروعه هو مش مشروع أنا بكرة وبعد مشروعه هو وأولاده مش مشروع أنا.
أنا عندي 3 بنات عايزهم يكبروا واشوفهم في احسن حال، وان شاء الله باذن الله اللي حابه تشتغل معايا، لان الشغل مش عيب، يوزعوا بره انتاج، اديهم يشتغلوا يوزعوا انتاج. اشكر شركه ساندا وصندوق سند، الحكومه الالمانيه والاتحاد الاوروبي، والف الف شكر لهذه الشركه اللي بتنفذ هذا التموين في مصر، وشكرا.
Fantastic. So that just demonstrates the impact that SANAD are able to have, not just that one business, but thousands of businesses all over the world, and particularly in the Middle East and Africa, which is the region that we're focused on for today's webinar. As I said, I'm going to pass over now to Alban Rishdi. Alban's one of the SANAD team, and he'll be able to tell us more about the organization and what it is that they stand for and what it is that they do. Alban, I'll pass over to you.
Much, Ian. Yeah, I think as the video illustrated, the SANAD Fund is a fund that facilitates investments into small, medium, and micro enterprises in MENA and Sub-Saharan Africa. And alongside of it, we have the technical assistance facility that does capacity building projects to enable a positive ecosystem, essentially, of entrepreneurship and micro enterprises. And we do this through our partners, as the video illustrated, through microfinance institutions and banks that really enable financing to create economic growth. And we see that fintech especially in the last decades, in the context of the pandemic, is becoming an increasingly important technology to allow our partner institutions and ourselves to give financing and optimize kind of customer outreach and enable economic growth. So we're very excited. I'd like to thank you as the moderator and our speakers for giving some insights today in terms of what digital transformation of microfinance is going to be about going forward and what we've seen in the past. So thank you so much for the opportunity.
That's absolutely my pleasure, Arben. So as a quick introduction of myself, I suppose my name is Ian Jenkins. I'm the FinTech lead for Base 115, and we're partnered with SANAD to bring you this series. We're extremely excited about it. We've got some fascinating topics coming up over the next 6 months. First and foremost, today's digital transformation in microfinance. Digital transformation, a hot button topic all over the world. Microfinance, an opportunity to do some real social good as well as generating profits potentially. We're going to talk through this in more detail. We've got 3 brilliant panelists. So I'm going to ask them to introduce themselves in just a moment. By way of an agenda, first we're going to hear from Margarete Biallas of IFC, and she's going to talk us through what do we mean by digital transformation in microfinance. Following that, we're going to have a Q&A with all of the panelists and have a moderated discussion with them. And at the end is the opportunity for you guys to ask your own questions. So please do use the Q&A function on Zoom here. Should be at the bottom of your screens. Send in your questions for the panelists. We'll address those at the end of the session. Just a few little bits of housekeeping from our side. You'll be able to see this whole webinar on YouTube later on. Please do take the opportunity to rewatch it. And also, please do tweet about the event. You can use the hashtag #SANAD so that all of our discussion is in the same place. With that said, I'm going to pass over to the panelists now to introduce themselves. I'm going to start with Nordyn Yacine. Nordyn, can I ask you just to give us a very brief introduction of yourself, who you are, who you work for, and what you do?
Hi everyone, my name is Nordyn Yacine. I'm the Chief Digital Officer of Vitas Group. Vitas Group is an FMFI operating in 5 markets in the Middle East, in Iraq, Palestine, Jordan, Lebanon, and Egypt.
Brilliant. Thank you very much, Nordyn. Julian, I'm going to pass to you now. Can you tell us a little bit about yourself, please?
Hey, everyone. Good to be here today. My name is Julian Oehrlein. I'm one of the founders of Oradian, and we're a fintech company providing a cloud-based core banking system and a core banking platform to microfinance institutions and fintechs around the world with a strong focus on Africa.
Thanks, Julian. That's fantastic. Margarete, I'm now going to pass to you, ask you to introduce yourself, and obviously to tell us about the topic that we're here to discuss today.
Thank you very much, Ian, and it's a great pleasure to be here. Thank you for inviting me and allowing me to share what IFC's learned over the last decade. As Ian was saying, my name is Margarete. I built IFC's digital financial services practice over the last 10 or so years, and before that was working with KfW, investing in microfinance institutions, as it so happened. So I'm a little bit familiar with some of the challenges you face. I have a single slide that I'm going to share as I kind of talk through a little bit about what it is that we do. So bear with me for a second. Here we go. I hope you can all see this. So I know this looks a little bit busy, but I'll talk a little bit through some of the things that, as I said, we have learned in the last 10 or so years of digital financial services, which in the early days really started with mobile money, right? In 2007, 2008, that's what it was about. And then the industry has really evolved into being much, much more than just mobile money. So some of what we're seeing today are really trends that are impacting microfinance institutions the world over, which combined result in a really different competitive environment as more and more non-traditional financial services providers enter markets like Branch, which is a digital lender in Kenya, or MNOs like Vodacom in Mozambique, or digital-only banks like mBank in Poland, and then last but not least, of course, the big techs like Alibaba, who through its Ant Financial Services rolls out not just payments, but also credit services across Asia. So this potentially crowds the lending space that was previously only served by microfinance institutions, right? And what we've been seeing in response to this very much changing environment is that microfinance institutions all over the world are really investing in digital projects of some form, shape, or size or another. Many are really looking through going to full digital transformation or setting up digital payment companies like Enda in Tunisia. But as we look at sort of digital transformation, we typically distinguish between two different kinds of approaches. One is what we call a going digital, which focuses on creating an experience by changing processes to new channels. So this is far more customer focused and not so much internalized. And then the other really is being digital, right? Which entails digitizing operations through new tech applications to transform processes and build or acquire commercial capacities. And these are not mutually exclusive and can be implemented in various different combinations. The first step, however, on any transformation journey is really to think through the what, why, and how. We at IFC work with microfinance institutions through a program we call DigiLab Finance, which is sort of a 12-week strategy formulation program, at the end of which you come out with a transformation roadmap. And some of the building blocks you see here and the core capabilities is what we kind of discuss through that program. So you'll get a 5-minute version of I guess, a 12-week training course. So when we talk about the what, it's really that we find any institution needs to be clear on what exactly is your objective of a digital transformation journey, right? Do you want to increase customer reach, increase corporate performance, find new sources of revenue, reduce costs? I mean, these must not be mutually exclusive, but I think you must, as an institution or management, be really clear what it is that you want to achieve. And then the next question is really, why are you doing all of this, right? And in most cases, that sort of is grounded in the desire to further the mission and vision of a financial institution. And then lastly, the why. To ensure the why becomes reality, you need to think through the how. How are you going to do this? How do you address digital transformation? How will you implement this? And on that note, I think there are a couple of points that are important. And when we speak to our microfinance and other financial institution clients and say, well, you really need to understand your customer, they of course tell us, we know who our customer is, right? We understand them. But maybe not in a way that new ways of doing business require. So a lot of the discussions we have in this course of, for instance, the DigiLab experience is really, what is your customer vision? Can you really understand what your customer needs? And from a perspective of the customer journey, the customer experience, can you develop a coherent vision? Because it's critical to understand the pain points and develop products and solutions that address customer pain points. I'm sorry, I seem to be having a stupid spot with the sun. So, and a lot of the work we do as we think with our clients through the digital transformation process is really on experiencing what their clients would experience in their customer journey, to feel and understand the pain points, to discuss with customers, real clients, what they like and what they don't like, because that will help design and shape how do you think about what you need to change and where you can leverage technology to go broader, better, deeper, and customize and personalize the customer experience so it's convenient, intuitive, fast, etc. The second piece is really around market knowledge, seeing how your market that you operate in is affected by new market entrants, potentially demographic changes, competitors that are coming in, and how that reframes the environment that a microfinance institution operates in. And there are markets that are far more competitive than others. Right? The Kenyan market is super competitive. If you are an MFI, because there's so much data and so much that M-Pesa has started that can be leveraged to easily come into the market. And then there are markets that are far less competitive also because of regulations, where there's not so much pressure from fintechs and outsiders coming into the market. And we see that in a lot of the North African markets, that it's not quite as busy as in, say, in India or China. The sort of really third building block beyond strategy, customer vision, and market knowledge is core capabilities. And what we do, or what IFC has developed, is really what we call a digital readiness assessment, where we look at the different capacities or capabilities a microfinance institution, or any financial institution for that matter, really has, and how well these existing internal resources, whether it's the HR department or the risk management or technology, are set up to support digital transformation, and where parts need to be strengthened, and where other parts are really well set up. So understanding your internal capacities and capabilities to really implement a comprehensive strategy is the sort of the third key piece to making digital transformation happen, really. And I think once you have assembled these pieces, then one can convert the strategy into really a business plan and an implementation plan that looks at what are the resources enablers we require, what's the business case, what techniques do we need to employ to really make this transformation happen. When Ian and I spoke before, one of the things that he asked about is really what's the critical success factor for digital transformation. And frankly, it is none of what you see on the slides necessarily. Yes, you need to have all of these pieces. But I think most importantly, it's really understanding that this is a huge change management process that an institution is undertaking, that there is a culture change that is going on, and that needs to be supported by management, because digitization really disrupts and affects the human experience, both on the side of the customer and the staff. So managing this change process, in our experience, is really a critical success factor, right? And that means you have to define your targets, and management has to walk the talk, and everybody from the board right down to the janitor needs to understand what it is you're trying to do, why you're doing it, and needs to become part of the journey. That means you need to define what a meaningful employee experience looks like, what are potentially gaps and resistance to change that you're facing, what kind of an ecosystem do you need to support your transformation strategy? What does success look like vis-a-vis your customers and your staff? How do you manage potential resistance to change? How do you measure the success of your change? So you need to have a clear management plan, concrete KPIs, and measure performance. But equally important, as part of taking your staff along the journey of your transformation, is really to create space for active innovation across functional units, for staff engagement to be part of and influence what is going on, to be heard. So all in all, I think it's the full digital transformation is not necessarily an easy journey, but what we have seen is that it is a very worthwhile journey, because at the end of it, most of our clients experience either cost reduction or customer growth or effort growth or all three of those. I think I'll leave it at that and hand it back to Ian.
Lovely, thanks, Margarete. And yes, as you say, if you can get growth in customers, cost reduction, etc., all in the one thing, we understand why people are fascinated by the idea of digital transformation. I'm just going to launch a poll now for our attendees. We're keen to learn a little bit more about you. Where are you and the businesses you work for up to when it comes to digital transformation? And just to learn more about the people that have been kind enough to spend the time and come and listen to us today. Thank you very much, Margarete. That was really fascinating. A real insight into some of the different challenges that face a company trying to go through a digital transformation. And as you say, it is a massive process, possibly one of the largest processes that an organization can go through. And I think you make an excellent point there about the difference between being digital and going digital. And I think it'd be interesting to see what some of our attendees feel their companies are up to there. Have they gone digital? Are they in that position where they've fully embraced the change, or at the moment is it just feeling the way? Okay, so we're going to move to our first part of our panel discussion. And the first question that I've got, Nordyn, I'm going to pass to you. And the question that I have for you is, when we spoke earlier, you talked about the fact that some of the markets in this region have risk factors in a socio-political context. They might have security issues. How can digital transformation help some of those businesses to operate successfully in volatile markets? And what's your experience of that been?
Thank you, Ian. Yes, so we operate in three markets that are highly risky and secure, politically unstable and volatile. The barrier of entry in those markets is huge, but the competition is less as well. It is costly for MFIs to maintain security measures, for example, in those countries. For us, for example, in Iraq, 40% of the overall yearly budget goes towards security. To secure the 15 branches we have with full-time security personnel, to make sure whoever enters the branch is not armed, for example, or to put measures in place for moving the money in and out from the branches to the banks, or to secure the movement of the staff from governorate to another. In that context, leveraging digital processes and product is a must-do and be a factor of reducing cost of operations, fast growth, and higher social impact. When you go digital, it means you have more flexibility, adaptability in areas where there are those risks. For example, digital can be used for customer acquisition via Facebook. Data acquisition on prospects and upload of mandatory documents can be done remotely. Risk assessment based on financial and non-financial data coming from mobile operators or social media platforms can help to speed up the turnaround time. Something very important in Iraq, for example, geolocalization can replace lack of postcode and address database. Digital wallet from mobile operators can be used for loan disbursement and collection. And the ultimate goal is digital branches, enabling larger customer reach. On top, there is, in our region, particularly in certain socio-cultural contexts, some clients prefer to apply for financial services without their entourage finding out about the loan. Digitizing spares repeat visits and contact, which enhance client privacy and confidentiality, especially for women borrowers. These are some examples of numerous activities and value that can be leveraged or delivered via digital channel if the target audience is able to activate them. And I think we will discuss this in the other questions. Market share in wallet adoption, for example, is still low and less than 5% in used in Iraq, for example, for repayment. However, if we look at the COVID-19 pandemic crisis, we saw our subsidiaries adopting quickly by proposing consent form for loan postponement via Facebook, for example, in 2020. Then we noticed that our customer engagement online steadily increased, passing from less than 5% in 2019 to now more than 20% in 2021. It means that people who successfully engage digitally stay digital. Thank you.
Absolutely. And do you find that there are risk factors associated with a digital process, anything along the lines of KYC or AML that you struggle with doing in a truly digital way that is easier to do face-to-face in those markets?
Come back to the question of what is very structural for the LFI and the human touch about it. If you want to digitize entirely a KYC, it means that you can rely on some digitally already done database of, for example, a criminal list, or you can also properly scan IDs if the IDs were generally spread over. And all of these problems of non-digitization of the raw ingredients make an entire end-to-end process of digitization of a loan impossible at the moment.
Understood.
But partially, at some stage, what you can do is digitize your internal processes and digitize piece and pieces that can be done with the customer, particularly on the loan origination, on the customer acquisition. You can leverage social media and you can do a lot of digital activity there. But at some stage, a human visit and a human contact will be needed.
Absolutely. Julian, have you found similar things, or are you facing different struggles in that space?
No, I think it's definitely spot on that obviously in order to do something digital, like there needs to be the connection to the real world. And I think especially in terms of onboarding clients, verifying records and so forth, these things need to be available digital. Often, like there is no central government ID that creates really big challenges, but ultimately it's about reducing friction, right? If in a market, certain things like say, like a population-wide ID is not available, that's obviously making operational costs of any financial institution higher. So it doesn't really matter that in some countries it's maybe perfectly smooth. It's just it'll be anyways priced in these markets. It's about being better than the competition and being able to offer a product which offers a better service or which is priced better by automating whatever you can automate based on obviously the circumstances a market or a community is in at a given time.
Absolutely. And Margarete, I know obviously IFC works with companies all over the world. Do you find there are specific markets that are more challenging for you to engage with because of some of those risk factors, or is part of your vision and mission to be available worldwide?
I think it's both, Anne. So yes, because of who we are and who owns us, we do have a mandate to work worldwide, no matter how difficult it is. Right?
Yeah.
But so it does include the Iraqs and Sudans and Papua New Guineas of this world, clearly. And yes, of course, there are markets that are far more challenging than others. Right? And these challenges are very different. It can be security, like Nordyn was saying, they experience in Iraq or Afghanistan or even in PNG. It's for us, a lot is also around the whole know your customer element. And that's both with regards to the shareholders of the microfinance institutions, but also, of course, how well MFIs do the KYC, the onboarding, et cetera, and manage risks. And then there's the cyber risk aspect. So there's a whole level of different stratospheres that you need to navigate in terms of how risky or not risky something is. And for some of those, technology can help, right? Especially when it comes to to anti-money laundering and other risks that go closely with the eKYC and potentially the absence of IDs. We find that tech applications can go a long way to reducing these risks. I think overall, when we think about digital transformation and challenges around that, it's not so much the security risks, etc., that keep us awake. It's more really the regulatory environment. And in some countries or regions, it's far, far easier for an MFI to go fully digital because the regulator is more open to innovation, maybe more open to experimenting with certain things, whether it is cloud-based, computing, data storage, etc., than in other jurisdictions where it's super restricted. Yeah, absolutely. I think somebody summed it up once to me by saying some regulators will tell you everything you can do, and if it's not on the list, it can't be done. And others will tell you everything you can't do, and if it's not on the list, the expectation is, come and talk to us and we'll work out how you can do it. I'm going to, another question for you, if I may, Julian. Just before I do that, we've got about a minute left on the poll, so please do get your answers in for that. If you've got any questions for the panelists, as I say, at around about 10 to, we'll be moving on to the Q&A session with your questions, so please do bring those in. Julian, when you and I spoke before the webinar, one of the things we discussed was your frustration on occasion at the difference between the press releases that we see, particularly in some of the developing markets in this part of the world, and the actual product that reaches last mile and the end consumer and is available to them. So talk to me a little bit about that. How do companies bridge that gap between what they say they want to do or what they say they're going to do, and then actually getting that out there and the product getting to market?
Yeah, I think there is obviously there's a couple of different type of products which are being launched, and I think where this experience comes from. But if we talk specifically about products or projects being launched with MFIs, I think especially obviously around projects now in digitalization, new wallets, new apps, new digital payment channels, and so forth. I think that the biggest challenge is really that often institutions maybe hear something and read something that someone is launching something new, but just because something is working in a certain area doesn't mean that that's the right thing for every institution. Like I'm hearing a lot of times, especially from MFIs, when we talk about core banking systems, oh yeah, and we would also like to launch our own mobile wallet. Now, just because that is a trend or was a trend, it doesn't mean that every MFI should launch their own wallet or is qualified to do that. It's an extreme example. Obviously, that goes down to the product level of the type of customers you serve, the type of installment payments you offer, and so forth. But I think it's very important for institutions to really figure out what is their USP, what makes them unique in the market where they're in, what are their strengths over the competition, and what's the niche they really want to focus on. How do they want to grow? How do they want to make sure that they are profitable or become more profitable, or whatever other goals they might be having? Once that's outlined, I think in a lot of cases, there's actually ways to run pilots, to do small trials in a branch, in a certain village, in a certain area, and so forth, which can give huge insights in, is that actually a viable business model, or is it just something you read about or you thought about, which sounds great, where everyone says, yeah, that's great, but there's really no holistic business case for that, or the execution is not great. Yeah. And I think then another very important element is that often, obviously, if MFIs launch digital products or projects, they work with partners. And partners are usually not properly incentivized. Partners are often incentivized to promise a lot and maybe deliver an okayish digital product. But a good digital product doesn't mean that there is a good product in the real world. So the way we, for example, work with our partners, with financial institutions or fintechs, whoever is using our platform, we work on a success basis. So yes, we have a product and we're confident in the product, and obviously the product needs to be good and needs to fit. But ultimately, I think the real proper reward and getting paid should come in with the success of actually running that product in the field in practice. And often, like if you see how technical projects or technical partners are selected, it's often a big focus on the functionality. Can you deliver us an app which does X, Y, and Z? but no one ever asks, can you deliver us an app which will allow us to, combined with a certain marketing campaign, reach 100,000 people within the next 6 months?
Yeah.
And so I think that that's often the challenge. And I think, yeah, usually these things work around like proper planning and then incentives around the partners you bring in to make sure that they're actually incentivized for your final goal, not just for the first step.
Absolutely, and we know there are lots of fintech companies operating in these, in these markets. And I think you make a fair point. What do you do rather than trying to say, well, we want to be the Alipay of insert country X? It always makes me smile. I'm always interested to know how many people that say that have ever used Alipay, because from experience, it's not very many of them. But there we go. It's about finding what do you do and what do your customers need? What's the problem you're trying to solve for them? Nordyn, I suspect you've had similar conversations with partner organizations. I know you partner with businesses in some really interesting markets, in Gaza, for example. Talk to us a little bit about how they bridge that gap between where you want to be and what your customers need and delivering in that last mile.
So for us, first we try to communicate on launch of products when we are sure that we can deliver something valuable. And digital actually is a very nice framework and ecosystem to speed up time to market. Because leveraging digital products can be tested in what we call minimum viable product. And usually the press release is at this stage where you do the minimum viable product, which is what we call an MVP. So basically you have a kind of non necessarily mature product, but you have enough value to deliver and test it with a panel of customers from 10 to 100 that you can still handle manually almost. And then you test the product, and more you test your market reach. Do you have a market for this product? And the secret of the ingredient sauce is to be able to react and adapt very quickly based on the feedback of this MVP experience. So the MVP experience can be for 6 months or whatever, and then you need to be capable either to pivot or change the product or modify the product, or then you can leverage the digital channel to grow and to go fast. So this is what the digital platform can enable. As Julian mentioned, the fintech, because NFI is a part of what we will call the fintech industry, or financial services where there is a fintech industry, you don't have to do everything yourself. There is so many, the fintech by definition is a company is doing very well one part of the value chain, but only this part. So why making effort on security investments to redo this part? Just partner and leverage the capability as a service of this fintech. So then with that approach, you can learn. And at some stage, after a maturity level of 3, 4, 5 years, if you decide to re-internalize, this is fine, or you just stay by outsourcing to the fintech service. So I think this is how you can close the bridge.
Lovely, thank you very much. Margarete, we've got some poll results in, and the poll questions really were to do with your presentation. So I'm going to ask you a couple of questions, if I may. So first of all, one of the things that we'd asked was which of the technology trends that you talked about are most impactful or most interesting to our attendees. For you, where do you see the big opportunity in this Middle East and Africa region? Is there one key trend, or is it about creating a web that links all of them together?
I mean, I think the sort of the overarching piece really is data, right? And that kind of ties a lot of the things that are the trends together. That is the sort of the cloud-based services, cloud-based data storage and management, but it's also AI and machine learning. And it's sort of interesting because it ties into the discussion you've just had with Nordyn and Julian around partnerships. And to me, partnerships are not just purely about figuring out the right IT provider, right? The IT piece and digital transformation in our experience is kind of the least of all your problems.
Yeah.
But it's really around the partnerships, whether it is partnerships to leverage data so you can do more, which is I think what we've been seeing happening, especially coming out of Ant Financial. So you just mentioned that, right? And Alibaba's data, that they're moving market to market now. And then when we tie that into the Middle East, it really is, it comes back to the regulations. What are microfinance institutions allowed to do with regards to getting data, storing data, and designing products off the basis of data. And for many jurisdictions, MFIs are very much limited to doing credit only. So to get to data points from payment data or e-commerce data or anything else that you might want, you have to get reasonably creative, right? So either they create dedicated payment subsidiaries, or you go back to the partnership idea. And then to me, there, the one critical point is really making sure it makes business sense for all partners involved. Otherwise, it will fail. And this piece of negotiating partnerships that are win-win for all involved, I think, is the hardest piece for the MFIs to get right in that partnership framework discussion.
Okay, understood. So on the odd chance that we have some regulators listening and watching, and they're saying to themselves, we'd love our country to become a hub for microfinance, for digital transformation. We see where the future is. What can they do as regulators to create the environment for these businesses to flourish, as far as you're concerned?
Yeah, I think that if we compare success stories, we've seen the most successes in regulatory environments where the regulator learns with the industry, right? Where there's a very tight connection between the microfinance industry and the regulators, and you basically take the regulators on board and say, this is what I'm thinking about, this is what I want to do, can I try and test, and will you allow me, and then regulate after. So when we go back to the very early days of mobile money, that is an approach, for instance, the National Bank of Cambodia took as Wing was being set up. And initially they said, oh, you can only do local currency. Then they learned that maybe this wasn't going to create the right environment. They said, oh, you can also do foreign currency. And today Wing is like the largest financial service provider in the country, right? And reaches more people than any of the individual banks, even Acleda, which is a very well-known MFI and one of the largest in the country, right? So, so I think that's where I would go with this, is allowed to test, try early, fail fast, and then regulate accordingly.
Sure. You mentioned fail fast there, Margarete. Julian, you guys have operated in the Middle East and Africa. We know that in certain markets, that idea of failure, it probably has a stigma attached to it still, in a way that some Western markets have tried to move past. In fact, in some markets, you might even say failure is almost over-celebrated in certain parts of the world. It's almost become a goal, fail quickly, you hear it a lot. How do you as an organization work with partners in those areas where you know that they have to have a capacity for failure in order to succeed? How do you help to take them on that journey in terms of organizational culture and technical know-how?
Yeah, so in our business, in terms of helping institutions to usually replace the existing core banking system and put something very modern, cloud-based in there, which works in real time and keeps all the data there in real time without archiving it and so forth. Obviously, it's always a huge project, no matter which system you put in place. So often, even already during the conversations, when we don't even know, is the partnership interesting for us or the institution or both, we really talk very concretely about their expectations and our expectations of this journey and of the partnership for the next 5 to 10 years. We also often talk about existing processes and how things are currently done, and that these things will mostly need to be touched. We have a very elaborate program really for onboarding, where a huge part of the onboarding is training and change management, to make sure that we're on time and we really get the result they want. And we don't aim for the result in terms of we want this process, we aim for a result, we want this outcome, this business outcome. And once that's in place, I think from a technology point of view, that's already a very big step forward, is to have a very solid base underneath whatever you do. And once you have a very solid base, which is interoperable with a lot of other things, then you can start experimenting. And then you can do lots of trial and error around that. And I mean, the way we're supporting our customers is we share a lot of knowledge across our customers. So we have customers in many different countries on different continents, and we sometimes see that, hey, these type of customers in this country, they're struggling with a certain part of the business, and they have found a solution. So let's also now educate the other customers about this. So that's part of it. And the other thing is just that we don't build like our incentive is basically to see our customers grow. So even if we offer a product on top of our core banking platform, which we could sell to one of our partners, if we see there's another product which actually would support them better in the market environment they're in, and will help them to grow further, then we're actually incentivized to make sure that they find the best product for their specific requirements in the market they're in the situation they're in, because ultimately our final motivation is to see our customers grow and succeed in the long run. So I think that's a really important and part of it. And then I think, we heard it before from Nordyn, MVPs, trial and error, take a couple of customers, try something out, see does it work, change it as long as you need to really find the product or the new service which really works for customers.
Absolutely. So a real win-win approach from you as a team. Nordyn, we've talked about digital transformation in microfinance today. Does the microfinance piece matter? Are there particular challenges or particular opportunities that microfinance has with digital transformation that, for example, a traditional bank doesn't have?
Yes, digital transformation actually is a cultural challenge for the original concept of microfinance. Because for a simple reason, the target customers are non or underserved clients by the banks. So this segment usually has low level of technology savviness. Social media has a lower penetration rate, especially in older segments within the market. The relationship between the MFI and clients is somehow special, because where there is a direct contact is very important with the client to build trust, as the MFI cannot depend totally on the numbers and the reports given by the client. The credit loan size assessment is based on personal interaction between the loan officer and the client. If we have high repayment rates and low PAR, it's maintained because of the community relationship and social bindings that is created between the loan officer and the client's portfolio.
Yeah.
The loan impact is evaluated through before and after visits and examination of the business. So all of these elements are, as I just described, the heart of the human interface. So the challenge is to balance the digitization and not losing this human relationship. This is why the end-to-end loan approval, disbursement, repayment without any interaction except by a kind of chat, or it will be very hard for a long time still because of these needs of the human, particularly the loan officer assessing the value of the business, and you need a physical visit on the field.
Yeah.
And the regulation. We come back all the time to the regulation, and I agree with Margarete. If the regulator does not authorize e-signature, for example, of a contract that is binding to court, then digitization will be limited all the time.
Okay, I'm looking at Margarete's face, and she looks as though she's got some thoughts on on that point as well. So I'll pass quickly to you, Margarete. Do you agree with Nordyn? Do you disagree?
Yeah, I'll be very quick, and I'll say to a certain extent I actually disagree, right? So I think it really depends on what kind of microfinance segment you're looking at, and what we are seeing, and that to a certain extent does worry us, right? That there's a lot of automated lending, which used to be the traditional microfinance lending, and the automated lending tends to go down market rather than up market as well. So catching customers way before they might even come into a microfinance institution. So we have clients like Simple Credit in China that have grown millions of portfolio assets by fully automated lending. I mean, yes, you need to have the right regulatory environment for it to happen. But I think this human touch element that for the longest time we thought was super important in microfinance is losing its edge to a certain extent. I'm sorry, Nordyn, to be
I just want
on
to
the
add
other
that,
end of the spectrum for that.
I just want to add that I will talk only anyway for what we know.
Sure.
We don't do consumer lending. We do just business lending. And for example, risk assessment on business lending is a bit different from consumer lending. You need a set of data that does not exist if you don't have a credit bureau integration, and if you don't have, you cannot sit on the historical financial history. So this is a bit more difficult to automatize than consumer lending. This is.
Sorry, this is also business lending. So Simple Credit funds, for instance, pig farmers in China. And I mean, all of what Ant does along the Alibaba value chain is business lending, right? But it's based on transaction histories that they get the data off. I just think we are seeing huge changes in the market, and there is a lot of completely digital lending going on. So it's not that it's not doable.
Julian, jump in and give us your view as well.
Yeah, I tend to agree with both perspectives. So the interesting thing is our partners and customers are actually both the traditional MFIs, but also fintechs who are competitors of MFIs, right? But who start from a tech background, usually from scratch and with a different approach, different management team and so forth. And the interesting thing is we see things move in, like converge in a way. We see that a lot of very good MFIs who are well run and who are forward thinking, they manage to automate almost every part of the process, and they use as their USP their brand in the community, obviously being able to see people physically and so forth. And we have seen a lot of fintechs who started with us as complete online only, which works well for disbursement, but then you have a year or a year and a half, like the last year and a half, where maybe repayments become difficult. And then a lot of the fintechs actually realize that they need to combine it with some kind of an offline component. Not necessarily in the traditional like loan officer sense, but have a logo somewhere, have people with your t-shirt and your logo on, walk in the mall or a billboard, or have agents who support collection. So we actually see the pure fintech players go into the physical world because they see it can really help them recover a lot of loans and increase repayment rates. And yeah, we see any type of different MFIs automate most of the process, even without the long data history, because ultimately a loan officer still only looks at data points in the end. So I think both can learn very well from each other.
Excellent. You're a born diplomat, Julian. So we'll move, if we can, then to some questions that have actually come in to us from the audience. And the first, will digital transformation in MFIs start to close the SME or the MSME lending gap? I'm going to ask you here, folks, each for an answer, but if I can ask you to make them short and snappy, as we're running close to time, and we've got a bunch of questions to get through. So, Margarete, if we start with you.
Yes, that's completely the expectation.
Excellent. Julian?
I think it can be a tool, but I'm doubtful that it will be the traditional MFIs actually winning that race at this stage. Digital banking or digital financial service have been around for quite a few years, and we're still talking about maybe we should start moving to the cloud, where others are there for 10 years. So I think it'll be close through digitalization. I just don't know, will it come from the traditional institutions, or are there new players, new kids on the block, so to speak, who will just have a completely different speed to market and win it ultimately?
Excellent. And what about you, Nordyn?
Well, I agree with Julian. I think I have nothing more to add than that. He answered perfectly.
Excellent. Well, there we go. Doesn't get any better than that. Okay, so another question then from the audience. What's the biggest obstacle to digital transformation for existing MFIs? And I'll start with you, Nordyn.
People.
Okay, short and sweet. Julian, do you agree?
Well, my answer would have been talent, so yes, exactly the same.
And it looks as though you're nodding your head, though, I agree. Actually, that leads us into another question that's come from the audience, which is, which of the markets in the region, the Middle East and Africa, do you think has the best talent for creating digital experiences, or should actually businesses in the region be looking outside the region for that talent? Sorry, Nordyn, jump in. Apologies.
It's a very difficult question because in Egypt there is a fintech industry that is flourishing. In Lebanon as well, but you are lacking of talent, like in almost every innovating hubs. I live in Ireland. It's one of the leading fintech places in the continent, and there is lack of talents. So it depends on the university capability to train and PhDs on the right academies. And the problem of these regions is that the talents tend to expatriate themselves outside the region. So this is a bit the issue.
Yeah. Would you agree with that, Margarete? Are there particular areas you find your partners struggle to find talent, particular parts of the world?
I was going to say, this is like a very hard question to answer, right? Because it is, the region isn't unanimous. It's like each country is very specific and very different and has its own talent challenges. I mean, the way we work, and I think Vitas also does, we combine local talent with bringing in outside talent to support our clients.
Yeah, okay. I've actually, the reason that you can all see Alvin, who's rejoined us on your screen, is he just messaged me to say, can he ask you all a question? So Alvin, I'll pass over to you. We've got about 3 minutes to go. So if I can ask you once again, guys, to keep the answers nice and concise, but Alvin, fire away.
Yeah, I think it goes along with kind of what was being discussed. I was wondering, in terms of digital transformation, as MFIs undergo such things, how important is to try to hire themselves talent, noting that there's outsourcing going on, and how much partnership plays a role. Kind of like, what is that balance? Can it be done all outsourced, or does it need to be something where knowledge is maintained in-house as a long-term investment? I think I can start with Julian, if you want to answer.
I think especially thinking about the shortage of obviously having the right talent in place, I think almost anything can be outsourced. But I think that the hard part, no matter do you do it outsourced or do you do it in-house, is managing it and from a project point of view and from a business point of view. And I think that's also where the challenge comes in. Like, do you have the right talent which can run these projects, but you don't need a single, let's say, developer in-house to really develop applications and software, as long as it's managed properly.
Lovely. Nordyn, what do you think?
I tend to agree. What is the most difficult part is to express properly the business needs and to translate these business needs in tech delivery. After, there is not necessarily a goal to develop everything in-house. You need to protect some IPs, obviously, but for the rest, it can be outsourced. But still, if you don't know exactly what you want as a business at the end, you will never get it. And this is where I think most of the effort has to be focused. And it's not easy to find people who understand well the business and can translate this well to the tech. It requires some experience.
Okay. Margarete, obviously, I've seen partners with lots of different companies, so I assume you see both approaches. Do you see one being more successful than the other?
I think I tend to agree with Nordyn, right? That it's the most critical part is really what, why, how are you doing this, and completely understanding that. And that includes also understanding what your customer needs are. And I think those are pieces you cannot ever outsource. So if I think about outsourcing and partnerships, I think it's a narrow part of the business. It's on the one hand, the IT piece, and that's the big discussion, build or buy, right? Whether it's an app or a core banking system. And IFC's published a handbook on that. So come visit our website. There's a 100-page documentation on how to decide whether to build or to buy. Typically, we advise to buy, I think, in this day and age, because building becomes super complex and most MFIs don't have the tech capacity to manage this and rather do a very good specification of what it is that you need, like Nordyn was mentioning. Right?
Yeah.
And then the other piece around partnerships and outsourcing is again around partnerships to extend reach. So think agents, partnerships to get access to data. So think e-commerce platforms, etc. And again, those are things where I think you want to build partnerships and go beyond what the MFI has in-house.
Absolutely. Well, look, that's a fantastic place for us to finish. Thank you all for joining us. The next one of these webinars will be next month in October. There'll be information about the topic coming to you via email, coming to you via social media. You can find SANAD at SANAD_MSME. Do tweet about the show today if you've enjoyed it. As I said, hashtag SANAD does FinTech. I'd like to thank our panelists and speakers. Thank you, Alban from SANAD, for joining us. Thank you to Margarete, to Nordyn, and to Julian for coming and talking to us and sharing your wisdom. Thanks from me, Ian Jenkins, as safe from Base 115. Please don't forget to provide some feedback. If you enjoyed the webinar today, let us know. You will see a survey in your inbox over the course of the next 24 hours. If we didn't manage to get to your question today, I do apologize. We only have a certain amount of time. We'll try and get an answer to you after the event. We look forward to seeing you all next month, as I say, the 20th of October at the same time. Thank you very much, and we'll see you all soon. Bye now.
Thank you, everyone.